Hey, what's up, everybody? Gold and silver are just getting started. That's right. According to Forbes.com, gold and silver are just heating up. Now, I believe a lot of people watching this video, those who have been watching my videos at least for the last couple of weeks, absolutely knows my feeling about silver. I am not buying at these super high prices, high premiums. That is my feeling about silver at the current time. And I'm also not buying gold. I think gold is too high for my liking as well. But what do you think? Let me know in the comment section below. But we are going to take a look at this article from Forbes.com that says silver and gold is just heating up. The U.S. Mint made unusual requests last week in a press release dated July 23rd. The Bureau literally begged Americans to start putting coins back into circulation by spending or depositing them. As you may have noticed, people just aren't making transactions with coinage like they used to. Well, I'm definitely not. What about you? I typically only use credit cards for the benefits, only for the benefits of using credit cards, pay them off right away as soon as they post, and use them cash rewards. Yes, indeed. That's especially the case now in the age of the virus, with many people sheltering in place. Billions of dollars in everyday purchases are being made online that in normal times would have happened at the cash register. Now, I sort of disagree with that. I think even outside of, even before this pandemic, I think a lot of people, I think a lot of people right now, current times, are kind of lazy and usually shop on Amazon anyway. So, yes, there would have been probably more people going to the store, but so there's probably a little bit more that are shopping on Amazon who may have went to the store. But if you haven't noticed, a lot of malls were going out of business because people don't go to malls anymore. Why don't people go to malls anymore? Because they buy pretty much everything they want to online for the most part. Um, this is creating a national coin shortage. Until coin circulation patterns return to normal, it may be more difficult for retailers and small businesses to accept cash payments. The Mint writes, adding that for millions of Americans, cash is the only form of payment. Without coins, retailers can't break bills. This crisis, if it can be called that, got me thinking about the velocity of money. In simple terms, money velocity measures the number of times a unit of currency changes hands in a given period of time. As an illustration, imagine you spend $10 on lunch at a restaurant in a strip mall. Same $10 is then used by the restaurant owner to pay the lease. The landlord then uses it to pay its own creditors and so on. When the velocity of money increases, just greater economy activity, money is being spent more freely and rapidly. And when it decreases, it suggests the opposite, that the economy is stagnating or deteriorating. People aren't spending. I disagree that people aren't spending. I do agree people are not spending cash or loose change, but I think people are using their credit cards. Below is the velocity of M2 money supply, which includes not just cash, but also so-called near money, savings, deposits, money market securities, and like. As you can see, it's at its lowest level ever using 60 years worth of data. So here we can see this little illustration. It's showing you here 1960 to 69, which was I guess, it looks like the second lowest, then 70 to 79. And as you can see here, 2010, 19, I guess right here is 2020, which would be near the lowest, which is, looks like right at about 1.4. So there you have that. What does this mean? And we can blame coin hoarders for this decline. Hardly. Instead, we should be directing the blame at the Federal Reserve, which has flooded the economy with easy money. Recorded money printing has been rocket fuel for the price of gold. Never before in its 244-year history has the US economy been so saturated with money. In fact, there's too much of it. M2 money supply growth is at 24% year over year, the fastest rate ever. Obviously, the economy isn't growing that quickly. It's simply impossible for much of this newly issued money to be lent out to consumers, and with rates so low, there's little financial incentive to do so. So it's just sitting in the bank excessive reserves, kind of like how coins just sitting in people's couch cushions and mason jars right now instead of being put into circulation. For many people, this underlines the belief that fiat currency is intrinsically worthless. Well, I completely disagree with that notion, but okay, because cash is not linked to a hard asset or, for that matter, anything of value. The central banks is free to print as much as it pleases right out of thin air, regardless of there being a demand for it or not. And as anyone who's taken high school economics knows, when supply outpaces demand, the value of any asset plummets. Okay. Cash is trash. Another thing that I don't agree with, which is cash is trash, but Ray Dalio, founder of Bridgewater Associates, the world's largest fund firm, said back in January, there's not a lot of money in cash. Instead, Dalio advocates for a highly diversified portfolio, one that includes gold and other hard assets we can't just print more of. I believe that it would be both risk reducing and return enhancing to consider adding gold to one's portfolio. Dalio wrote last July in an article posted on LinkedIn. That same month, he revealed that gold would be among his top investments at Bridgewater. It was a masterful call since he wrote the article. Gold spot has climbed 35% on Friday for the first time since 2011. The precious metal crossed above 1900 an ounce, and today it hit an all-time record high, trading above 1940 for the first time ever. Now, this was just a few days ago, so this article is a couple of days old, but still holds true. Spot gold back above 1900 an ounce, and as you can see, here is since 2001. Man, who would have loved to have bought gold under $400 an ounce? I wish I was indeed buying here. Not sure what the premiums were here, but regardless, and then you can see here in 2011 as it goes up to above $1,900 an ounce. And then for quite a while, gold was, around 1,200, got down to almost 1,000 here, and it sat around here for a couple of years. And I wish I would have bought more in this time frame here. And then, as we can see this, now I do believe, in my opinion, again, I'm not a financial advisor. This is not financial advice, but I do believe we will see at some point this dip again. We will see this in gold, and I believe we will also see that in silver, like we did back in 2018. And okay, so it says Dalio isn't the only name investor and money manager who recently threw his weight behind gold. Speaking to Bloomberg TV on Friday, emerging market investor Mark Mobius urged viewers to buy gold now and continue to buy as interest rates remained near zero and the COVID continues to impact mine output. I don't agree. I don't, for me, I don't agree at buy at every price as gold and silver are going higher and higher and higher. I like buying at lows, not buying at highs, and that's just for me. But everybody is indeed a little bit different. Hi ho silver. When gold makes moves like this, silver isn't too far behind. Silver was behind gold. While gold was going up to 1400, 1500, 1600, silver was not following. Silver really did not follow gold's movements until it got close to that $1,900 mark. Anyway, the white metal rose above 2,300 an ounce on Thursday before trading in the 2270 range on Friday. Since silver's 52-week low in mid-March, holdings in silver-backed ETFs have increased by 255 million ounces. Now, speaking of silver's 52-week low in mid-March, silver was between like 11, $12 an ounce. But the only place that we were able to take advantage of those lows, if anybody did take advantage of those lows, was in ETFs. Physical silver premiums were so jacked up that you were not able to take advantage of those lows. The consumer was not able to do that. When silver got into the between 11 and $12 an ounce, premiums on American Silver Eagles were like it was you had to buy it was like $26 per American Silver Eagle on average, and generic was like 19 to 20-ish, I believe, if I remember correctly. So we were never able to take advantage of those lows in March. The only way we could is if we bought the paper ETFs. Anyway, let me know what you think about that. So it says total holdings now stand at a record of just under 860 million ounces according to Bloomberg data. All right, we're not going to go on any further, but let me know what you guys think about this. Well, let's take a look at this little illustration. Silver's biggest moves ever, 2020 follow. And then here it looks like here you have, so this line right here looks like that is 1980, which was the Hunt brothers manipulation. And then here, the yellow looks like that would be between the 2008, 2011, when silver did in fact go over $40 an ounce. 2020. Here's just a little blip right there of 2020. But let me know what you guys think in the comment section below. There's a lot of this article that I just do not agree with. Let me know what you guys think in the comment section below. As for me, I am not buying really anything at these extremely high prices and premiums. Let me know what you guys think in the comment section below. Please like, comment, subscribe, and I'll talk to everybody on my next video. Thanks a lot, everyone.